Welcome to Crypto Simulation Theory. I am the Gaussian Snake. I'm going to talk to you today about the crypto markets and if they are looking bullish going into August and September and beyond. So just a reminder, nothing in this video is to be considered financial advice. Please be sure to also join my free Telegram group at the Snake Pit. I have a link to that in the video description, and also subscribe to this channel if you'd like to see more content like. We can see that the stock market has been a little bit rough lately, having a drawdown, if you look here, of about 5%, which is pretty significant, and one of the largest drawdowns we've had in quite some time. And on the Gunnar exponential moving average band, we actually printed a bearish cross on July 26th, although there has been some recovery since then. We're not sure if this is going to be sustained. And so this sort of brings up the question of, are we looking at rate cuts this coming week? I believe the Fed meeting is on July 30th. Could we see rate cuts as soon as July 30th? The CME FedWatch CME Group prediction is that no, we will not see rate cuts in July. In fact, they're saying 93.8% chance that rates stay the same, and only a 6.2% chance that we see rate cuts. So that, there is a non-trivial chance that we could see rate cuts on the July 31st meeting, not the 30th. But mostly they're saying no, this is going to be pretty unanimous, higher for longer. So if we look at the probabilities by each FOMC meeting date, we can see again on July 31st, higher for longer seems to be the consensus. On September 18th, these probabilities have shifted a bit. People are calling for about an 88.2% chance that we'll see between a 25 and 50 basis point rate cut. And then on November 7th, which is right after the election, they're calling for another rate cut. So this is kind of like laddering down very gently. And you might wonder, well, why is the Fed not going to be more aggressive about cutting rates? And they're seeming to be kind of pulling back very slowly if they are to follow what the market is predicting, which is September rate cuts and not July rate cuts. I think you have to look no further than the inflation rate. So you can see that we printed a bearish cross on the Gunnar EMA for inflation in May of 2023. Inflation really has come down in a material way and kind of been chopping around the 3% level, which is exactly where we are right now. This chart formation looks very bearish for inflation. So I think the Fed's done a pretty good job. They could afford to cut rates, but cutting in July might just be a little bit too soon. You want to see this bearish action continue a little bit longer. Remember, bearish for inflation is good for us in risk assets. So this is showing that inflation rate has eased up quite a bit and that things are generally headed in the right direction. I know the federal funds target rate is right here at around 2%. Let's see if we could draw a horizontal line there. So this is kind of like the line in the sand. And I do think we will get close to this. We may even achieve this next year. For how long, though, how long that takes, I don't know. But giving the markets another few months to just prove that inflation is indeed coming down and is not going to head back up would probably be a good idea. And that's probably why you're seeing the CME Group price in a less aggressive rate cut environment than what many people might be hoping for. Also notice that U.S. oil prices, after reaching what I would call a lower high back in earlier in July, they've also kind of been tanking, putting in a daily bearish cross as well. And those are daily timeframes can change, but this is also good news, seeing oil prices come down in this kind of way. I think we're also starting to see initial claims head up. In general, this is an uptrend that initial claims have been in since 2023. And, seeing things like this, along with, the unemployment rate also having ticked up a bit, I think it gives the Fed enough justification to start considering doing rate cuts. Yeah, this is the unemployment rate, and there's no doubt that this is heading in the wrong direction. And we're about to have a bullish cross on the Gunnar EMA, which hasn't happened really since April of 2020. So we're seeing unemployment start to tick up. Although I didn't show it in this video, job openings have been ticking down. You're seeing signs that I think the rate hikes that the Fed did are starting to cause the economy to crack. Seeing the S&P pull back. And so this is all very consistent, along with inflation coming down for probably exactly what the Fed hoped to achieve. And while I don't think they're going to be able to avoid a recession, I also don't think that recession is coming right now. I think even with unemployment at 4.1%, actual recession may still be a little ways off. You know, typically you're going to rally hard into one. You're not just going to find yourself in one when everybody's thinking one is going to happen. Not to sound superstitious, but that's just generally how it works. Now, let's shift our focus over to crypto. I'm not a macroeconomic guru, but I wanted to present at least enough evidence to show why I think rate cuts are justified, which will sort of explain my thesis behind the crypto market. What you're seeing here is the logarithmic regression fit to data on the total crypto market cap dating all the way back to when we first have measurements for this metric, so about 10 years ago. Here in orange is the median line, and then we have this in standard deviations of half from the mean. So this is like 1/2, 1, all the way up to 3, and then negative standard deviations as well, which you typically see during accumulation years and bear markets. So we're above the median line, which would indicate that we are in a bull market. And it looks like we had a nice like bull flag here that is starting to potentially break out or put in a higher low. And that's kind of what we need to determine. And all this is happening at the 1/2 standard deviation line. So traditionally in bull markets, like past bull markets, we've made it to the 1.5, we've made it to the 2 on major mania tops. So we would anticipate that we're probably going to go a little bit higher than this when all is said and done, and possibly make it back up to this line here later on next year. But I'm not really here to make like long-term forecasts. So let's just kind of zoom in and see what this pattern might be telling us. Granted, we're just looking at log regression. So, and this is on a weekly time frame. So what we are seeing is a bit of a hammer candle forming here on the weekly. So the question is this a higher low or lower high, or is this the formation of a trend change? Like, is this an actual bottom down here? This looks like a tweezer bottom almost. And are we about to start another uptrend that's going to take us above the half standard deviation line, where we've really spent the majority of our bull cycle this year? We've been just kind of in this zone. And you can see that, previous times you could spend quite a bit of time flagging and then eventually you break up. So I think we're going to see some pattern like that play out. Whether that's happening now or it might take a little while to happen sort of remains to be seen. My base case, though, is, with rate cuts on the horizon in September, I think that we're gonna probably see the market drop at least one more time, and then it will probably be a pretty substantial drop, because when the Fed says that they're going to cut rates, even if the CME group is sort of like forecasting this is going to happen, it admits to the broader markets that there's a problem with the economy. And you'll see this with the stock market crashing, unemployment going up. You already can see the cracks starting to show that we probably have a recession on the way at some point in the medium term to long term future. Not anytime super soon, but I think there's one coming. But we could always say if there's a recession coming. That doesn't really say much. So I think that this could turn into a potential higher low. It's possible, but I don't think this flag pattern will necessarily get disrupted in a big way until rate cuts have resolved themselves. So I think there will be some kind of drop that will come on rate cuts, and I think that will mark the last drop of the bull market, the last major drop. Okay, there'll be pullbacks, there always are, but I think that that's going to be what sends things higher, ultimately speaking, because, and you can see it's like a cup and handle formation that's been forming on total market cap, and I think we're going to see this really start to rocket off next year. And I think it will actually start to happen in Q4 of this year after rate cuts. So with rate cuts, I anticipate a drop and then a bounce off of that. So that's kind of my base case. This is Bitcoin on the weekly, and you can see the cup and handle forming. So basically, you have this giant cup, and then you have the bull flag, which is going to be the handle. And so the question is, are we about to exit the bull flag? I mean, we have a bullish hammer candle on the weekly. That's pretty impressive. So we could begin exiting this this bull flag pretty soon. I mean, it could happen in August. August could be a very green month. But even if we do, let's say, take out the all-time high from March, which is kind of at the the tip of our cup here, I still think we're going to see a pretty substantial pullback. I don't know where that pullback is going to take us. I have no idea. But right now, a bullish hammer candle is a very, very, bullish formation, seeing that this volume was bought up. So if this candle confirms, I mean, this is a question mark, which we should know fairly soon. Then we could definitely see some very, very exciting times coming in August. That will be briefly probably interrupted in September by rate cuts. That's at least my base case. I mean, we're at 69,000 as I'm recording this video, so this is a price level we haven't seen in a little while. Yeah, so it's kind of hard to look at this and be anything but bullish. You do see the volume kind of contracting here a little bit. We haven't seen any major green bars on volume, but I think buying momentum is going in the right way. I want to look at the Wyckoff volume momentum indicator. So let me pull that up. So that's here, right here, Wyckoff volume color. And you can see buyers have actually been in control lately. Although the buy volume momentum has been kind of slowing down. Another thing I'd like to look at is the MFI oscillator volume profile and take a look at what the oversold, overbought conditions look like. Haven't looked at that in a while, so I think it would be good to look at that. It's the oscillator volume profile trend scope. So looking at that, we can see a really, really convincing double bottom on the oversold. And I talked about this in my Telegram group quite a bit, how we were quite oversold, double bottom, and look at that bounce. So I have to think that things are going to get quite bullish in August, and then we'll see a little bit of a pullback probably into September, and then we'll see the real bull market start to take off. That's what this narrative is telling me. It's hard to see anything other than bullishness at this point, given all the data for Bitcoin. So one other thing I wanted to look at is Bitcoin dominance and kind of see what's going on over there. So let's take a look at dominance. There's some people who are really bullish on Bitcoin dominance heading into the end of the year. I'm not one of them. I think that Bitcoin dominance right now does look impressive. I mean, it's nearly at 57%, not that far off from the previous macro high for this cycle, but the Gaussian channel tells a different story. We see an inflection point here in 2023 and a concave down widening. Last time this happened, it wasn't good for dominance. You can see dominance just kind of barreled through, and it's just hard to imagine this thing super elevated for much longer. I am very doubtful that dominance can get much higher than this yellow trend line. I think it will probably take out this high right here, but look, it's just been pretty much a sideways chop. It's hard to really call this a bullish dominance. You have a rising wedge pattern, which is nothing really all that impressive in my opinion. So if we turn on a Gunnar EMA, you can see that it's just barely holding a bullish structure. Now, granted, the last bullish cross was in January 2023, and that's quite impressive. That's held the bullish Gunnar EMA structure for that long, but you can see the band is starting to narrow. So I think that Bitcoin dominance will remain strong in August, and probably, I mean, it could pull back a little bit, but I don't think it's going to necessarily flip bearish right away. But I mean, who knows, right? And I think on rate cuts, we'll probably see a spike in dominance as well. But I think Q4 of this year is probably not going to be too kind to dominance, especially as we get towards the election. And I think 2025 will be a bear market year for dominance. So I don't think that Bitcoin dominance has much further to go. And I know this is a little repetitive if you've been watching my videos, but you just look at this shape and it's not a bullish shape. I mean, this is like logarithmic growth, and it looks like it's ready to stall out at any time. The bounces are less impressive. We still haven't taken out this high. I think we will, but we haven't taken it out yet. So I sort of see that what's going on right now is like dominance's last stand before it tanks, which brings me to Ethereum and altcoins, right? So that's like logically where we want to go now. So with Ethereum, Bitcoin, so again, this is the valuation of Ethereum against Bitcoin, which is all that really matters. I don't care about the USD price because we just care is Ethereum outperforming Bitcoin. That's why you would hold it, right? Ethereum has been putting in a series of lower highs and lower lows, and I don't think that structure has necessarily broken just yet. While we did have that very impressive upwick back in May that took us right to this long-term support trend line, which is now flipped to resistance, we straddled the lower boundary of the red Gaussian, which is expanding, concave down. This looks bearish. So I think Ethereum, while Bitcoin is going to be probably running pretty hard throughout August, I think that Ethereum will not be able to keep pace with it, and you'll see the Ethereum Bitcoin valuation probably continue to drop. I'm still looking at a bottom, probably around sometime around rate cuts, starting to form down here in this red zone, which I've had on the channel for a long time, 2.03 and 0.04. There's a lot of horizontal support here. I think we will find a bottom down here. I am open to, I mean, I've been open-minded to the idea that this could have been the bottom back in May. I've said that in my channel, like I was open-minded to, but I didn't think so. This was like a 5-year support trend line that got broken. So I'm expecting that this will be resistance now. So what will be our new support line? It's way too early to say. I think 2025 will be extremely bullish for ETH Bitcoin, but I don't think the bear market for this asset is over yet. Let me be clear, this is ETH Bitcoin, not Ethereum itself. And following up with that, we'll look at others' dominance, which is the dominance of the altcoin market. This, of course, does not include the top 10 altcoins. So this is, excluding the top 10, which is, we'll look at another metric that does include them. We had a bearish cross on the Gunnar EMA in May, and then the bearishness has just been increasing. And something that I also noticed is that the Gaussian channel flipped to concave down in green, and it's probably going to turn red again. So, while some altcoins are doing better than others, my general expectation is that Bitcoin is going to dominate the market for the majority of Q3 and some of Q4. That will be reflected in Bitcoin dominance continuing to just chug away, probably, topping out somewhere around 58%, if I had to guess. And unfortunately, I think others' dominance may continue to bleed a little bit more than it already has. I can't tell you exactly when this is going to round the corner and turn around and get more bullish, or if we're going to take out this low. I don't think we will. I think if anything, others' dominance will at worst double bottom. So I think there's a chance that you could see others' dominance, do something kind of like this going into September, like somewhere around here, where it would like put in a slightly higher low or like a double bottom. And then after that, we could see others' dominance start to take off. Okay, so heading into the end of the year, I do anticipate that we will see Bitcoin dominance start to struggle a little bit. I don't know exactly how steep to make this, and we'll see altcoins start to have their own recovery. But there's nothing to indicate right now that altcoins are about to explode. We have seen some recover, or we have seen some, maybe put in some lows against their Bitcoin pairs. But let's really wait until after rate cuts and see how this all shapes out, because I think altcoins are going to get hit hard on the news of rate cuts, but that will also kind of reset the crypto market in a sense that I don't think Bitcoin will no longer necessarily be in control, or I don't think Bitcoin will be in control for that much longer once rate cuts have happened. So we can see that total 3 minus USDT divided by Bitcoin is still in a bear market of its own. I would call this more of an accumulation phase in a bear market at this point, but I mean, it's still below a red Gaussian channel now. What I do like here is that the red Gaussian channel has fattened. It is concave up, and it looks like we're on the verge, if not already, of forming a bullish cross after this uptrend, this brief uptrend that we've had on, actually, no, we're nowhere near that. My bad. Looking in here, I actually misread that. The red Gunnar EMA top is here. It kind of almost blends in with the red Gaussian channel. It looks like we're actually facing a rejection at the green lower boundary. So yeah, I guess the story is going to be probably one more final drop here before altcoins start to take off in a very material way. And we've seen stuff like this play out before. We go back here to late 2020, but really, you could look in 2019 as well. We've seen these things play out before. Right here. This was 2020. We saw a big drop, and then a really big bullish hammer candle, and then another big drop before altcoins really took off. So yeah, I mean, it's been sideways for quite a long time, for over a year now. I call this like an accumulation zone. And I think it is. That doesn't mean it doesn't mean that we don't take out this low. I think there's a chance we do. But whatever happens, I think the wreckage for altcoin Bitcoin pairs is close to being over. I think just a few more months of this at most, and we'll see this start to turn around in a very big way. I think as soon as Q4 of this year, it's not that far away if you've been waiting for over a year, and we'll start to see the bullishness really return to the altcoin market. And trust me, you haven't seen anything yet. Even if you've made gains on your altcoins, you haven't seen what's coming. It's going to be absolutely incredible. If you hold an altcoin that's doing well right now against Bitcoin, I hold one such altcoin. I know people in my Telegram group hold some altcoins that are doing really well against Bitcoin. That's an altcoin you probably want to keep. We have a Bitcoin season index, or an altcoin season index score of 16 right now. So that's a double bottom at the moment. I think we are likely to go lower. And we're really going to carve out Bitcoin season, I think, in Q3. And as we get into Q4, I think we'll start to climb out of it in a more material way and set the stage for altcoin year, which I think will be 2025. And yeah, I mean, it's not that far away, guys. I mean, we're like only about 4 months from the end of the year. So before you know it, we're in 2025. And I think it's going to feel a lot like 2017. Very explosive, not only for Bitcoin, but also for altcoins. We're going to get into that phase in the market, I think, where it just seems impossible for anything to go down. So, I think, like, in conclusion, I'm very bullish on altcoins, very bullish on the whole crypto market, but I think we have one more big drop coming. It's kind of like when you're on a roller coaster ride and you've had a few drops, and then all of a sudden there's this last nasty drop to kind of scare you out. So don't fall for it. If there's another big drop, rate cuts are always, I mean, they've almost always been bearish for markets, but that's what's needed to get that deep value that people are going to buy up as liquidity starts to increase in the overall market, which is going to make its way into riskier assets. So nothing to be bearish about right now. I think, the best thing to do, and again, this is not meant to be financial advice by any stretch of the imagination, but probably the best thing you can do for yourself is, if you don't have any altcoin positions, it's not the worst time to start thinking about accumulating them. So, I think that once Bitcoin dominance finally carves out that bottom, once Bitcoin dominance finally carves out that top, and altcoin season carves out the bottom, which corresponds to Bitcoin, the altcoin season index corresponds to Bitcoin season happening when it's below 20, that's where you could see a very spontaneous major recovery by altcoins. And so the altcoins that you want to focus on are ones that are holding up well against their Bitcoin pairs. And I actually posted a live stream recording Q&A about that exact thing, like how to find those altcoins. So be sure to check that out. I'll link it in I'll link it on the after screen for this video if I'm able to do that. And so yeah, overall very bullish on the market. I think August is likely to be an exciting time. September probably not, and that should set the stage for a very bullish Q4 for Bitcoin, which will transition itself into an altcoin season that all in which will probably last throughout the majority of early to mid 2025. So yeah, that's pretty much where we're at. So thank you. If you enjoy the content, please give me a like and a follow. Tell me what you think. Do you agree with my assessment for the crypto markets? Tell me in the comments. And be sure to join my free Telegram group, the Snake Pit, to have more discussions like this. I do daily chart updates and all other kinds of analyses there. Lots of alpha in that group. Great people. We're a fairly small group, so you don't have to worry about your voice being drowned out by the crowd. Everybody there gets ample attention, and yeah, you can ask questions and stuff like that. Totally free. So yeah, that's it. Hope you enjoyed your time in the crypto simulation. I'm the Gaussian Snake. None of this is financial advice, and I will see you next time.